Today, we're going to be talking about trend analysis indicators, and our first indicator is the Elliott Wave. So let's talk about the Elliott Wave. The Elliott Wave was developed by Ralph Elliott, who believed that human psychology, which is apparent in the markets, moved between optimism and pessimism. Mr. Elliott thought that this optimism and pessimism resulted in the markets moving up and down, or a wave pattern. The wave pattern is the result of 5 different legs in the market, 5 legs up and 5 legs down. The first move up is wave 1, which is called an impulse wave, and then wave 2, which is a pullback or retracement, is called a corrective wave. You then have wave 3, which is usually the strongest of the waves, a corrective wave 4, and then a final push, which is wave 5, and this wave usually results in a correction and a reversal in the opposite direction. The waves should be used in combination with other indicators, such as parallel channels that we covered in another video, and the waves can help us identify support and resistance in the trend. You can also combine the waves with Fibonacci lines, and the corrective waves should line up with your Fibonacci retracement points. So let's take a look at Elliott waves on a chart and how they can help with our trading. We're going to use a chart of the S&P 500 to draw our Elliott wave and to show how we can trade using the Elliott wave indicator. First, we're going to go to the left-hand side, choose Elliott Impulse Wave. We're going to find in the chart a double bottom, so we have a reversal indicator. So now we're going to have the beginning of our waves. We're going to start at the bottom of the chart, draw a line, click and hold, draw a line up to this high. We're going to click there. That's our wave number 1. Often the wave number 1 is difficult to identify until the pattern has already begun to form, because many people think this is a retracement to the upside that will be followed by a further leg down. We're using our double bottom as an indicator that the market has turned up. So now we're going to draw our wave number 2, which ends here. We click the mouse and it puts in our second wave, which is a corrective wave. Our third wave includes some sideways action, but then the market continues to move up. And here will be our third wave, which is often the largest wave. We'll move down and draw wave number 4, which again is another corrective wave. And now we'll have wave number 5. We click, and there's our Elliott wave pattern. Now, one way to trade with the Elliott wave pattern is to connect points 1 and 3. So we'll move over here, and we're going to draw a trend line. So connect points 1 and 3, moving up. And now we're going to connect points 2 and 4, also with the trend line. And that's going to give us a channel to trade in. So we have both the Elliott wave, which gives us a channel, and then we have a larger channel by connecting 2 and 4 and 1 and 3. Often the 5th wave will not rise to the top of the channel, so we can put in a third trend line in the middle of our channel to predict where wave 5 will end. So we can use this as a sell point. We don't want to get short because we're still in an uptrend. And then we can use our channel, and when the S&P drops through the channel, that's our sell point or the point where we want to get short. So you can use both the Elliott wave as support and the channel as support, but you'll see the market doesn't trade down to the bottom of the channel, but does trade down to the bottom of the Elliott wave. So by using the Elliott wave in combination with the channel, we're able to predict support at various points in the uptrend and trade long as the market moves back to these support levels here and here. We would get long, and then either sell our long position or go short as we break through the channel to the downside. So that's the Elliott wave in combination with a parallel channel. Now let's go to a 30-minute chart and see that we could use our Elliott wave on a much shorter time frame in combination with our channel. Here, when we come to the bottom of our Elliott wave, that's support. We could trade the 30-minute against both the middle line we've drawn in our channel as well as the upper portion of the channel. We come back, find a little bit of support at the midpoint of the channel, and then we find major support at our Elliott wave line. And you'll see the market rides the Elliott wave line, moves to the upper part of our channel, which we could use as a sell signal, and then falls back, breaks through our Elliott wave line, and then eventually breaks through the lower part of our channel. So we can place several trades in a short time frame on the 30-minute chart using the Elliott wave in combination with the channel. I'd like to thank you for watching this video on trading the Elliott wave. In our next video, we'll be talking about the exponential moving average. I look forward to seeing you in the next video.